In past videos, particularly yesterday and the day before that, we talked about how we were approaching quite interesting, nice, round numbers for the indices. This being 4,000 for the S&P, 32,000 for the Dow, and 12,000 for the NASDAQ. Now the NASDAQ and the Dow got up above those levels, and the S&P 500 did for just a few minutes, and then gave it a nice kiss and pulled all the way back. Not so hot, is it? Not so hot. We'll see what happens. A lot of people are looking at this, we've broken the downtrend from the peak as a sign that we have broken the downtrend. Actually, I see a little bit more of an important inflection point that is the capitulation of the Fed, that the situation is out of control, the inflation situation, that things are a mess. And that's the May 4th meeting. The May 4th meeting is when the Fed took 75 basis points off the table. What did they do at the next meeting? They hiked 75 basis points. What are they going to do at the next meeting? Either 75 or 100. So I think the May 4th meeting signifies a shift, a further downside shift for the market overall. And that trend hasn't been broken. As a matter of fact, I obviously don't know exactly what the exact tick is, but it looks like we just hit the roof of that at 4,000 right now. So this is just technical explanation. I'm not a technical expert, but I do look at them. I do consider them. And I find that interesting. And that's my rebuttal to this notion that, we've broken the trend since the peak, therefore the bottom's in. Notion that some may have, or is a belief that many could have. I'm sticking with the fundamentals. And the fundamentals seem to point to a recession. AT&T's having problems. Verizon missed earnings as well. We've seen what's happened with Snapchat. That's probably going to occur in Facebook and Google as well. And who knows where else in the economy. I've talked about Apple a whole lot. I learned today, I did not listen to the AT&T earnings call, but I learned today that part of AT&T's lowered guidance has to do with incentives for people adopting phones. Now, if AT&T is going to front the bill for a new iPhone, that's great for Apple. I'm still somewhat concerned. I'm curious where that earnings report is going to come in, but might have to, pull back those negative expectations just a touch. But who knows? Maybe it's AT&T's way of getting people on to their subscription, and they're having less people on trying to join their subscription and even pay their bills. So we'll have to see what happens with that. That's next week. We've got the Fed meeting. Another thing with the Fed meeting, and this is really important. We talk about yields. Everyone knows about yields. Yields go up. Growth tech comes down. The growth tech rally has been going on for a long time. It's just in the last couple of days people have decided to pile on. ARK bottomed May 12th. We've been riding it for some time. We have taken some gains, although we still have some positions, and we've added aggressively, moderately aggressively, to downside protection. So we'll see what happens. But Fed. So rates have come down, I think, artificially. Now the 10 years around 2.7 and change or something like that. That's not good. That's not what the Fed wants. The Fed said the market was pricing things in when we were around 3% and above. Now all of a sudden we're well below 3%. I mean, the Fed is hiking rates. They're not cutting rates. They're hiking rates. So they want rates to go up. So I think the fact the rates are coming down, they're going to try and give us a little spook. They might not hike 100 basis points, but the chatter in the next meeting is going to probably be around something that's very important. A lot of people calling for peak inflation, but the Fed has said they're not going to change course until there's several consecutive months of declining inflation. We just had one hot report, the hottest report we've had. Guess what? It's going to be several consecutive months until there's any sort of pivot. So I get it. Some people are saying, there's going to be a pivot in the future. Yeah, I agree. There's going to be a pivot in the future. But I don't think it's going to be at the next meeting. especially with rates coming down. And oil has come down a little bit, but it's stabilizing. Copper's back up. So we're going to have to see what happens. Wheat's probably going to come down here. It's very interesting out there. But I am not all rosy. I think we hit 4,000. We're pulling back from 4,000. And we'll see what happens. Maybe new lows, maybe not new lows. But I think this past couple of days has been way too strong. I think earnings aren't going to come in too hot. We've already seen that with a number of companies. And I think the party's just getting started. Last quarter was pretty optimistic. You know, companies were up for a day and then came right back down quite aggressively. Now we're starting to go down. What's going to happen next quarter once we've gone through a quarter of this and further deteriorating economic data? I mean, we've seen poor economic data this morning, PMIs. What else is going to happen? So, you know, I'm going to let things play out. I'm going to have the hedges on. Hopefully those produce some gains. Then I'm going to have cash. And then hopefully stocks will be lower and I can deploy that cash. So that's how I'm thinking. We'll see what happens. And until next time, peace out.